Good morning, good afternoon, good evening, everyone. I am Roxana Mohammadian-Molina, Chief Strategy Officer of fintech company Blend Network, a peer-to-peer property lending marketplace. Today's panel is titled "A Digital Currency: How the Pandemic is Driving Innovation in Finance." Of course, this is a hugely relevant time to be talking about fintech and innovation in finance. It is in Saudi Arabia as we begin a decade that will lead to the kingdom's Vision 2030 goals, where we know that fintech is one of the key pillars. I've discussed in the past how Saudi Arabia could be on the brink of a fintech revolution as it boasts a young, tech-savvy population and offers a source of business and very talent pool for fintech companies. And yesterday we heard from His Excellency, the Minister of Communication and Information Technology, about the digital transformation that's happened in Saudi Arabia and how COVID-19 has accelerated that transformation. But not only in Saudi Arabia, and as the pandemic has put the entire global banking ecosystem under stress in 2020, despite increased revenue in some cases, the need for personalized digital solutions has really become crucial more than ever before. For example, the rapid expansion of financial access across the emerging world has sparked demand for digital banking. So today we want to talk about the innovation that we have seen over the past 12 months, how those innovations are shaping the future of the financial industry, and how partnerships between traditional financial services institutions and innovative fintechs, as well as strategic investment in fintech startups, can help reimagine the financial industry for the better. Joining me on this panel today to discuss these very relevant questions are four distinguished CEOs. Bob Diamond, founding partner and CEO of Atlas Merchant Capital, joining us from New York. Steve Jacob, managing partner and CEO of BTG Pactual UK, joining us from London. Vijay Shekhar Sharma, founder and CEO of Paytm, joining us from India. And Oviosu, founder and CEO of Paga, joining us from Lagos. Please join me in welcoming all of our esteemed panelists. So I'll ask this opening question to all of you, if I may. Over the past 12 months, what are the trends in finance and banking that you have seen accelerated? And how do you think the pandemic and the economic slowdown have impacted the fintech industry? Well, would you like to start with the trends that you have seen in the US and also globally, obviously because your company invests in financial services companies?
Thank you, Roxana. Pleasure to be here and happy to kick this off, talking a little bit about the United States and the financial services industry and banking and what's happened in the last 12 months. And I think, you started off with the right phraseology. It's been an acceleration. There's absolutely nothing in the last year that we hadn't seen already brewing, already developing, but there's been an incredible acceleration. And it's interesting. It's in very, very different ways. On the one hand, there's the story of the large incumbent national banks in the United States. Interestingly, over the last year, they have become larger, more concentrated, more integrated with the government, which is very unusual in the U.S. to be making a statement like that. But as agents in some ways of the government programs during the Fed initiatives, the banks have become even closer to the government and public policy. So interestingly now, over 50% of the retail deposits in the U.S. are concentrated with four of the large independent banks. So that's one trend, which is probably not what you expected me to say. On the other hand, consumer behavior is really taken off in terms of the adoption of digital access. And this has really been driven by stay-at-home and lack of access and people's desire to not be in public places. And to say that the adoption of technology for consumer banking has taken off would be a huge understatement. And then third, interestingly, one of the things I've always seen in the U.S. relative to the other economies is the huge, deep, liquid capital markets. And in times of crisis or times of change, the reliance of the U.S. on the depth and diversity of the capital markets has been very, very helpful in times of crisis, but also in times of opportunity. And when I think about the pandemic and I think about this year and I look at the incredible explosion of SPACs, we've all read about this. The U.S. capital market, again, has innovated and added a tool that's been around for a while, but it's really exploited this tool of SPACs as a competitor to the traditional IPO process, a process that has really not changed much since the 1930s and has been an oligopoly for the large investment banks. And because of that, we have seen an explosion in the number of technology and particularly fintech companies that have been able to accelerate their growth and become public through SPACs. In Atlas Merchant Capital, in fact, we have launched a SPAC and we are looking specifically for fintech opportunities and to take those companies public right now. So an interesting combination of three things: the entrenchment and concentration of the incumbent large national banks, the explosion of fintech valuations and the ability to come public, the explosion of consumer behavior. And I'll wrap up this comment with a comment that Jamie Dimon made a week or two ago when he gave the results of JP Morgan, which were extraordinary results. But when asked about fintech, he said we should be scared very much about fintech. And he talked about PayPal and Square and Stripe and Ant. He talked about Amazon and Apple and Google and the competitors, and the fact that for JP Morgan, as strong a position as they're in, they kind of have a battle ahead of them in terms of the entrenched banks versus fintech.
Thank you so much, Bob. This is really interesting, and I'm curious to know what are the other panelists, thinking. Vijay, you with Paytm, you obviously have been actually one of the pioneers of digital payments and digital wallets in India, even before, obviously, way before the pandemic. So I would be interested to know what are the trends that you have seen in digital payments and digital wallets and fintech generally over the past 12 months.
Yeah, thank you. Thank you so much for having me here, Roxana, and pleasure to be here. Well, like you said, the biggest thing that we saw changing in these pandemic days was contactless payments. And effectively, mobile payment overtook the card payments in the country, and mobile payments started to become order of magnitude contribution to the economic transaction. We've seen that in China, and finally, India has started to see the number of transactions which are in ratios of a couple of $100 billion overall as an industry processing in a year of a $2 trillion economy. So we basically are crossing 10, 20, 30% of the total number of volume of retail payments being done using mobile payment. What we saw was that digitization, which we always believed that card-based networks will take. In India, it is mobile network that is overtaking, or mobile payment that is overtaking the card completely. I mean, right now, mobile payments are 2 to 3 times bigger than card payments. And pandemic only accelerated it. And one of the things that Paytm pioneered in India was QR code-based payments. And merchants could sign up by going on an internet website, signing up, and giving us detail, and taking a QR code and printing. So we saw a huge increase in number of, I'd say, merchants that do-it-yourself signed up, because we did not have a sales team in lockdown, and how could we do it? So remote payment, in-store QR payments, and not even requiring the Square kind of device or Ingenico kind of device. We basically can say that India is taking a leap ahead of what typically a developed economy has seen. For example, like right now, we just heard that in US, we talk about Square, which is exactly nothing but a device, a new age fancy device. But that has moved off in India because we have now seen the mobile payment taking over this. Obviously, extending that trend will include lending. So buy now, pay later, in-store credit card replacements using Paytm Postpaid that we launched. We saw a very quick adaptation of that because people who were not getting more credit. They, instead of waiting for a credit card to be issued or credit card payment to be done, and many other restrictions of credit card acceptance out there, were able to do the mobile payment using a buy now, pay later product. So that also was a pleasant surprise for us. So I believe that pandemic more or less accelerated the journey of mobile payment and journey of in-store credit and move away from credit card in a digital credit way.
Thank you so much for those insights, Vijay. Steve, what are the trends that you have seen in Latin America? I know that you guys at BTG have been very active in the fintech space, so we'd love to hear, the views from that market.
Hi, Roxana, and thanks for letting me be here. I think I'm going to echo a lot of what Bob said. What you're seeing in Brazil and here in the UK is very similar to his comments of the US and more globally. The direction of travel hasn't changed pre-pandemic. More adoption of digital, more adoption of AI, big data. The pandemic was a huge accelerator. The speed of travel has really gone up, and the number of people on the journey is exponential. You've only got to look at a number of people in lockdown at home, more time on their hands, using apps they've never used before, thinking about their financial security, their financial future, trading, investing. You look today at the crazy markets and Reddit and Robinhood and GameShop, etc., and you can only, it illustrates the power of what we're all talking about. And in Brazil is 200 million plus people, which is small compared to India, but it's quite big compared to many other countries around the world. And a young population, very digital savvy. And you're seeing a large adoption of a lot of what the other guests are talking about. And not just now in the millennials, the Gen Z generations, it's all the way through to the baby boomers and the retired generations. And I think that's one of the big differences. It's now become mainstream for a lot of people. It's interesting, you look at Brazil and you talk about, and Bob talks about the SPACs, which is such a key point, but the global markets, the listed markets, the capital markets are also very, very relevant. You've got a company in Brazil called Stone. It's over $20 billion now. It's again another payments company. Came from nowhere 4 or 5 years ago. We were an early investor in that. You've got companies that are still private, and that's the other side of that coin. There's this wall of private money as well that is looking to find a home. And you've got companies that have stayed private for much, much longer through this phenomena. We've got a company called Nubank in Brazil that did a recent round of $25 billion. Again, a relatively new company, like the name suggests. And those trends, it provides a dynamic that's very supportive of this trend continuing. So I think it's really allowed fintechs to flourish. I guess putting the black hat on and looking at the flip side a little bit, you have seen instances where fintechs have been exposed where they may be one revenue dependent, and the obvious example is some companies that are more exposed to FX transaction fees or other such fees that are related to travel or the hospitality sector, et cetera, have suffered. And you've seen down rounds in valuations as a consequence. So it's not a case of everyone benefiting, but I think the general story is certainly one where fintechs have shown what they can do, and the adoption levels are just going through the roof.
Thank you so much. I think we have a great panel because you guys have views from different regions. So Tayo, would love to hear your thoughts from the African perspective and the frontier market perspective around digitization, cash digitization, and mobile payments as well.
Yeah, thank you very much, Roxana, and it's a pleasure to be back here at FII, and albeit remotely, and good to see all the panelists. So my company, Paga, is building the Square Paytm for in Nigeria, really just about making it easy for individuals to perform transactions digitally and for sellers to collect payments. Through this pandemic, really at the height of it, we saw the acceleration towards the trends that Vijay talked about. I think Africa is still a bit earlier than where India is today, but the uptake and people looking for those digital options was really clear. On our platform alone, we saw 700% quarter-over-quarter growth in signups and people using the platform, which by the end of the year led to about 400% growth in revenues coming from those individuals, right? And in other parts of Africa, we're seeing similar trends, and we're seeing where governments are also leveraging digital payments for a variety of things. In Senegal, we saw where the government was pushing for more online transactions with merchants. Ghana came out with a unified QR code, right? Companies like Visa are partnering with various companies around the continent to drive this move to digitization. So we're seeing an amazing increase in use of digital. And one of the things that was really big in Nigeria last year was Bitcoin. As of the end of last year, Nigeria is now the second largest market for Bitcoin P2P. And this was driven by many factors, driven by the pandemic, but also by government policies. I think Steve mentioned foreign currency, right? So the currency policies in Nigeria are also driving people to look for alternative methods. And then at some point last year during the protests, there were also a shutdown of people making donations towards protests, right? So that led people to driving towards Bitcoin. So I think some of these trends we're going to see it stay. In summary, we've really seen the acceleration and people starting to say, what is an alternative way versus me going physically to a store to make a payment? What is an alternative way for me, rather than me going to the bank, to actually transfer money to someone? And so I think we're starting to see that those foundations that have been laid are starting to come to fruition very well.
Perfect. Thank you so much. I'd really like to quickly touch upon collaboration and integration, because this is so important in the fintech industry. And I asked you if each of you could share one examples of successful collaboration and integration that you have seen in the fintech space over the past 12 months. That would be great. Bob, please, if you like.
Yeah, I'll take this up because
so we haven't seen a lot of integration on the banking side, other than the acquisition of skills, I should say, or technology and data and artificial intelligence. But in the fintech space, certainly transactions like the acquisition of Venmo by PayPal, where a traditional 20-year veteran, 20-plus-year veteran of that industry is buying even more advanced technology. What we are seeing a lot of is collaboration. And, in areas like electronic trading, a lot of the banks can't take the positions on the balance sheet that they took previously. Trumid is a company that we've been an investor in. They've recently announced collaboration with Barclays and with Goldman Sachs. Neither Barclays nor Goldman, a standalone bank, couldn't acquire the business because then it becomes proprietary to them. But if it's going to be an industry participant, then collaboration is the model that tends to be prevalent. We've seen another example with a fintech company we've invested in called Crux Informatics, in terms of the collaboration with a number of large investors such as Two Sigma and Goldman Sachs. So we're seeing a lot more on the collaboration side than on the integration side.
Thank you so much. Would love to talk about these topics for hours, but I'm conscious of the time. So just to conclude, I would like to get from each of you one thought for 2021. Steve, please, if you could give us one thought for 2021.
One thought for 2021. I think I think you're going to see more of the same. I think you're going to see. You're actually going to see, I think, reacting to what Bob said, more risks taken by incumbents. They've been slow. The financial services industry is categorized often in many countries with oligarchical situations, 3 or 4 big players, and that breeds this kind of lack of competition and a poor service, and that's what customers feel. And that's why fintechs have such a huge opportunity, because they can come in with their digital native mindset and their user experience focus. And I think that these big incumbents, acknowledging that they've done really well in these markets, as mentioned, like JP Morgan, Morgan Stanley, BTG Pactual in Brazil, but we're almost forced to work with and integrate and acknowledge what fintechs are doing so that we can address the weaknesses seen in traditional players. We're a traditional player and we're a fintech. And we see the huge benefits that that they offer, and I think you're going to see more of that. I think you're going to see the bigger incumbents take more risks and get into this space in a way that they cannot avoid anymore.
Thank you so much. Vijay, in 30 seconds, one thought for 2021.
The fintech will be mainstream. They won't be looked at as an outsider, newbies. They would be the mainstream businesses.
And Tayo, in 30 seconds, please, one thought for 2021.
I agree with that one, and I would say that we're going to see China dramatically expand its digital R&D project, and we're going to see the U.S. government really push further around the digital dollar as well, which is a project I'm actually advising on. I think we're really going to see the move to see a country moving towards digital, full digital currency.
So as a closing here, I just want to thank all the panelists, Bob, Steve, Vijay, and Tayo. It's been a great pleasure to moderate this panel. Thank you, everyone.
Thank you.
Thank you.
Thank you.